Hi, and welcome to this week's Market Minutes from Stockscores. This week I want to talk about what happens at support and resistance, because how price behaves leading into support and resistance will affect how it behaves when it gets to support and resistance. So it's important to understand this concept. When stocks are falling into support, in other words, they're going down day after day after day, when they get to support, they will typically stop going down and make a bounce. And conversely, stocks that rise into resistance will usually stop going up when they get to an old ceiling price. However, if a stock goes up to a resistance level or down to a support level and then goes sideways, trending in a narrow trading range sideways, when they finally break through resistance, they will tend to go up, and if they break down through support, they will tend to then go down. The takeaway from this is that you want to be cautious about breakouts through support and resistance that don't come after a period of sideways trading, after some consolidation is what I call that. So let's look at an example here. This is the chart of the S&P 500. And this week you can see the market was falling down into support, and therefore it's no surprise that it bounced and we had a good move to the upside on Friday. And by the same token, if we go back to November when we had resistance right about there, market rallied into resistance and got stuck there and moved lower. And it, went sideways here for a little bit, but it never made that strong break up through resistance. And as a result, resistance held up and the market moved lower. So this is a concept you want to keep in mind, because there's a tendency for people to buy breakouts. If this had gone one more day and broke out to new highs, people say, oh, it's a breakout, I got to buy. But unless they consolidate and trade sideways first and then break out, you don't want to pay too much attention to those. All right, let's get into this week's analysis. This is a 30-minute, 30-day chart of the S&P 500. We've had a lot of volatility in the last little while, obviously. We've been in a downward sloping channel and lots of moves up, down, up, down. Friday, we actually broke through the top of that channel after maybe an hour or two of trending sideways at the top of the channel. So that's encouraging for next week. We'll see if that can materialize into something where we get a few days of upside. Going to find resistance on a horizontal basis at around the 190.450, 195 range. But I would say next week is shaping up to more likely be higher than lower. Now keep in mind that there's a shortened trading week next week. Monday's a holiday. All right, let's look at the long-term chart of the S&P 500. And here we can see that support has held at those tails. We still have pessimism. The tops are falling. So encouraging that the market has held support. But, if it consolidates here and goes quiet and then breaks down, we're in for more trouble. If it instead can break up, well, then maybe we'll try to move back up towards the downward trend line, which looks something like that. Right now, market's a little oversold, so quite likely it'll bounce here and then move up, but by no means do I think that this is a good-looking market yet. On the Russell 2000, which is the small cap sector in the US, you can see we're still below the trend line. We bounced off of some lows, encouraging that it bounced off of lows, but by no means is it out of the woods. We want to see it break this trend line, build a rising bottom, and then start to move up. It's got lots of work to do before it can achieve that. Here's the TSX 60. Of course, strength in oil on Friday helped the TSX. It was in a slide all week. But again, strength in oil on those comments out of the United Arab Emirates about possibly scaling back production. That helped oil prices move up, I think, better than 10%. And that is a big factor for the Canadian market. So we got a little bounce there on the short-term basis, but still below resistance here. Lots of work to be done. And maybe we get a little more upside, but we're going to run into resistance over there. Of course, what happens on the TSX will largely be dependent upon oil. Now, here's a longer-term chart of the TSX, and you can see that we're really just trying to work our way back up to the downward trend line. We were heavily oversold here on oil weakness, and as I always say, when you run down and away from the trend line, you usually come back up to it. Well, we ran down and away from the trend line, and now we are almost back up to it. So we've got a little bit of upside in the short term, but I'm not feeling too great about it until I can see a break through this, and I'd like to see it from a rising bottom, which hasn't quite happened yet. All right, here's the TSX Venture. Gold is helping the TSX Venture. Of course, a lot of gold miners listed on the TSX Venture. and it's trying to break its downward trend line. It's tried in the past, it kind of tried here and failed. It rallied up. Now we've rallied up again. I want to see a good strong break to the upside. I do like that it's trading a little bit sideways there at the resistance of the trend line. If we can get a strong break to the upside, maybe finally this market, which has really been a terrible market for many years, maybe it will finally catch some bids again. Here's a chart of the treasuries, and I chose to draw the daily chart this time. Normally I show the weekly chart, but the reason I show the daily is because this trend here went parabolic as markets got a little nervous and scared about possibly bigger, badder corrections along the way. This is called a bursting bubble. So anytime you get a parabolic trend, you hit a new high and close below the open on strong volume, I call that a bursting bubble. And that means at a minimum, we're probably going to pull back to the linear upward trend line. So look for bond prices to go down short term. I think because the market's trying to stabilize, we'll probably get a little bit of a rally next week in the market and a little bit of a pullback in bonds. However, the trend is still up in bonds, and of course in stocks the trend is still down. US dollar, on expectations that maybe there won't be 4 interest rate hikes this year in the US, that really took the US dollar down. Probably was supportive for commodities like gold and oil, and it broke a kind of an important pattern here. So we had sort of a pennant there, broke down. That's interesting. We'll see how that materializes, if that's it, or if it's going to try to bounce back as the market stabilizes. But certainly this is a neutral to slightly negative chart, whereas prior to this big pullback here, I would have called it a neutral to slightly positive chart. That's helped gold. Of course, the speculation that the U.S. will not be raising interest rates as quickly as many had thought has helped gold rally, and weaker U.S. dollar, which is related to the same thing, has helped gold rally. Gold's gone up too fast off of a low, so my feeling is we're going to see profit taking here eventually, but it'll be interesting to see if it then forms a rising bottom and then starts to move up again. I would not chase gold or gold stocks higher here. I would wait for the pullback and then the break of the pullback. So what you want to look for is, right now we're rallying higher. If it can pull back and then break the pullback at a rising bottom, that'll be a good signal to get a little more aggressive on buying gold and gold stocks. Oil, good rally on Friday, nice stability on Thursday after it really went through the lows. But here's another example where we fell into support, and so this breakdown is not very critical because it did not consolidate first. It did not go sideways and then break down. So instead what's happened is we went through support just slightly. We bounced off of it nicely. That's good. Kind of expected, as we talked about at the top of the video. However, downward trend line is still intact. No rising bottom. In fact, you have a falling bottom. So although lots of people are saying, hey, oil's stabilizing and these comments out of the UAE are positive, the chart still doesn't show that the negativity is over for oil. It could be the start. We could see this break the downward trend line next week, pull back a little bit, build a rising bottom, and then break higher. But it hasn't done that yet, and so that's what you want to watch for. Build of that rising bottom after we can finally get through to break this downward trend line. All right, so finally, fear. Fear's been on the rise for a while. Got a little ahead of itself there. You can see kind of a bursting bubble there again. Pull back to the trend line. If we see some weakness in stocks, we could pull back a little lower here. Sorry. Let's just erase these here. So, we could pull back to this upward trend line by coming back to here and then bouncing, and market goes back into corrective action. So I wouldn't worry too much about the fact that fear is pulled back. I wouldn't think that that is the sign of a bottom. Again, it's a positive step. There are a few positive steps this week, but we're not out of the woods yet. If fear breaks down through that trend line, if stocks can break their downward trend line, a lot of ifs, then we can start to get a little more optimistic about stocks. Everybody wants to try to buy the bottom. It's the most expensive way to trade the stock market. Trying to pick the bottom comes down to chance, and I don't recommend trying to do it. You're better to sit in the weeds, wait for some better signs that there's a bottom, and yeah, maybe you miss out in the first part of the move, but your probability of success is so much higher. So U.S. stocks, I remain bearish long-term, neutral short-term. Same thing for the Canadian market. Seeing some positive signs in the short term. Gold, neutral on both time frames. I like the market action lately. I think it's a little overextended. I think gold will pull back before it goes higher. And long-term bearish on oil, but encouraging that we had a little bit of a bump up at the end of the week there, so I've raised my rating to neutral in the short term. So rumors of oil production limits and a softer US dollar helped oil and gold move up this week, but there's still pessimism dominating in the longer term. A good showing for stocks on the strength of oil to finish this week, but volatility remains high, therefore uncertainty remains high, and investors are nervous. There's a glimmer of hope this week, but I want everyone to remain cautious. That's been the Stockscores Market Minutes for February 15th, 2016. Have a great week in the market and trade well.